Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, December the 21st. I'm going to take just a brief minute to discuss what equity markets did last week as we just finished our seventh straight week of gains. And I hope that you have everything done for your holiday shopping list and are prepared for this weekend, as it is already the 21st of December and it is upon us quickly. But 7 straight weeks of gains. We're building on an eighth straight, with the S&P 500 last week up 2.49%. The mid cap index, as measured by the S&P 400, was up 4.31%, which was much more than the S&P, and the small caps, measured by the S&P 600, was up 6.1% on the week, the winner of the week. And as we look back, and as we've been talking about for weeks and weeks and weeks, is where's this rally coming from? Well, we talked about how the market was really led higher by a handful of stocks up until November. And so you're really starting to see the rest of the market waking up. And just to give you some idea of where we sit still year to date and where we can go, and this is just in the large cap. There's not as big of a divergence in the mid and small caps, and I'll talk about that in just a moment. But the large cap growth sector is up 40% year to date, while the value is only up 8% year to date. These numbers are as of last Friday. There could be some deviation a little bit there, but 40 to 8 is the difference there between growth and value. So what you have the opportunity there is what we call in the business reversion to the mean, or just the fact that we aren't hitting the recession that everyone had clamored for, and so everyone sold off the cyclically oriented stocks that are going to be more sensitive to economic cycles. Well, we haven't hit that, and we don't foresee hitting one in 2024. So all of these cyclical stocks that are very economically sensitive have been left behind the equity markets and haven't participated until the last 7 weeks. And a lot of them have been sold off as sources of funds and tax loss selling throughout the course of the year, and we're actually negative and are just now trying to get back positive to breathing room year to date, not to build upon monumental gains. The small and mid cap sector, again, more economically sensitive because they don't have the liquidity and the capabilities that the large cap companies have, whether it's in the bond market or the credit markets, and able to raise debt that way. They are more economically sensitive, and they have been very cheap and undervalued. And they're, as you can see in my reporting earlier, they're the ones outperforming the large cap, and you should expect that to continue as long as we don't have any economic signs of slowdown. The other thing that people aren't really accounting for yet, you're starting to get trickles of it in, but one that we've been talking about for some time, is next year is an election year. It's 2024, there's a presidential election year, and the party that's in power does not want the economy by any stretch of the imagination to be faltering during that time. So expect that they're going to do what they can in their power to keep the economy going, and expect the government programs and the stimulative programs that we talked about to really keep the government going and the economy growing through 2024. We are just getting back to more normalized growth than we've seen over the last 3 years through the pandemic. So what this means is you have these opportunities still in a long runway forward for a lot of these stocks. You can still buy these stocks and these value stocks at single-digit price to equity multiples. So we expect at River Place, as we head into 2024, we expect the broadening out of the market to continue, and we expect the fact that the equal weight S&P 500 may in fact outpace the S&P 500 as a whole, because the large Magnificent Seven, or however you want to call it, the winners this year, will become source of funds to buy the losers of this year as we head into next year. Not to get so simplistic on a technical side, but we expect that transition to happen and continue to happen. The reason why that'll keep the index level flat and the equal weight will outperform is because the index is so heavily weighted by these top 7 holdings. They control 30% of the S&P 500's market cap weight. So when they go down, the index itself is going to go down, or when they're flat, the index stays more likely to stay on the flatter side. But underneath, in the internal workings of the S&P 500, there's going to be a lot of action. But don't be surprised if we see a lot of volatility as well in 2024 as we're navigating Fed rate cuts and when they're going to do, how much they're going to cut, if they've cut too much, not enough. and you'll see that argument go on in 2024, which will create volatility. And of course, unforeseen events that no one can know is happening can throw a wrench in the system. But as always, if you have questions about how to navigate and prepare yourself for 2024 and how to position yourself in your portfolio, give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Happy holidays and Happy New Year. Thank you so much.